Welcome back to the channel. This week, Alphabet's Q2 2026 results highlight how central Google has become to the broader tech and Nasdaq story. The company reported second quarter revenue of about $119.8 billion, up roughly 24% year-on-year, with net income jumping to just over $112.8 billion and EPS around $9.11, both comfortably ahead of market expectations. In other words, Google delivered a clear double beat on revenue and profit, supported by strong momentum across search, YouTube, and especially cloud, which saw revenue growth in excess of 80% year-on-year. However, despite this double beat, the share price still declined moderately after the release, with the stock falling around 3 to 6% in extended trading, as investors focused on the latest increase in Alphabet's spending plans. Management raised full-year 2026 capital expenditure guidance to a $195 to $205 billion range, up from the prior $180 to $190 billion, underscoring the scale of AI and data center investment the group is undertaking, and reinforcing concerns about near-term free cash flow and margin pressure. For the Nasdaq, Google's earnings reinforce the idea that the index is still being driven by AI-linked growth, but with a higher sensitivity to profitability and cash flow signals. On days when investors focus on Alphabet's strong top line and margin expansion, the Nasdaq tends to find support. When the conversation shifts back to the sheer size of the CapEx plan and the first signs of cash flow strain, we see renewed volatility and profit-taking in large-cap tech. So the weekly takeaway is, Alphabet's Q2 numbers confirm that the fundamental AI and cloud growth story remains intact. Yet the moderate share price decline after a double beat shows that the market now prioritizes discipline around record AI infrastructure spending. That balance between growth and returns will be a key driver of Nasdaq performance through the rest of Q2 reporting and into Q3.